Hello traders, Gary Wagner here. It is 11:45 in Honolulu, 5:45 in New York on Monday, 29th day of August, 2022, and this is the Daily Report for gold and silver. An interesting day in the precious metals markets after Friday's dramatic sell-off of about $20 immediately following Chairman Powell's keynote speech at the Jackson Hole Economic Symposium. We expected gold to continue to trade lower, which it did, trading to a low overseas of approximately $1,731. However, traders did step in buying the dip, whether it was short covering or initiating long positions or a combination of both of those, as I suspect. We now have gold basically neutral on the day, down 30 cents, with the most active December contract currently fixed at $1,749.50. If you recall from Friday's show, we were stopped out with a small profit on our last trade. We went into the weekend flat with no active trades. We got in last week on Monday at 1747 and then out on Thursday at 1759. The most interesting thing we can identify in today's activity on a daily chart is the fact that it formed a doji candle. We'll address that more when we pull up some technical studies. Now, the dollar was basically neutral also today. We also saw a doji form in the dollar, but in terms of a net change, it's a fractional decline of 0.03%, with the dollar still exceedingly high at 108.715. Traders, unlike gold, silver did continue to spiral to lower pricing, giving up approximately 1% in trading today, 1.07 to be exact, with September silver currently fixed at $18.54.5. The decline in silver today might be due to continued pressure in U.S. equities, meaning the industrial component of silver had less demand on the day due to weaker U.S. equities. This first chart we are looking at is an hourly candlestick chart of gold futures representing August and then December. We can see that the gap formed right here is the moment when they switch from the August contract as most active to December. It has a 50-hour moving average as well as a Fibonacci retracement that we talk about during the opening letter. That retracement starts at 1680 up to 1824. And the reason that that is important is that we saw a strong sell-off after Powell's speech. Then on Monday morning in Australia, we saw a continuation of that sell-off. However, when market forces took prices just below the 61.8% fib retracement, that's this area right here, we can see that traders absolutely went in and bought the dip. It was the assumption that the market became oversold at that point, and whether that's a short-term or a initial key reversal, which I believe is less likely, we did see a recovery to where we have gold now, which is currently sitting in essence unchanged, $1,749.50. What's interesting is the activity over this last day formed a candlestick simply called a doji, and we've looked at that on other occasions. We have converted the 60-minute candlestick chart into a daily candlestick chart, and what you can see is the identification of today as a doji. This would be a long-legged doji, and that is because you have large wicks on both the upper and bottom area, and the real body, meaning the open and closing price, are kind of in the middle. If it comes in the bottom, it's a tombstone. If it occurs a little bit further up, it's a dragonfly. But nonetheless, the dojis themselves all indicate the same thing. Either consolidation, because the fact that it opened and closed at the same price point indicates that neither the bullish or bearish factions actually had any profound or lasting impact on today's trading. It opened and closed at the same value. The fact that we have an exaggerated low and a nice wick on the upside tells us that there was an active battle going on, and that's how the Japanese trader would describe it, and that's how they look at the doji. Now, in and of itself, a doji does not really predict anything, but they are typically looked at as whether or not they are components of a larger pattern. And what I mean by that is as follows. What I have just done is drawn in what we would see if we had a strong update tomorrow and that formed a large green candle. Collectively, these three candlesticks, meaning tomorrow, that is just simulated right now, the doji that formed today, and the red candle that was caused on Friday by Powell's dramatic speech at Jackson Hole, would be interpreted as a three-river morning star. It is stronger with the doji, but even if it has a small spinning top, meaning a small body, as long as the real body is below the red candle and the green candle, it is a proper identification of a three-river morning. If it in fact closed above the 50-day, as I have put in this example, that would give it further strength in terms of taking the signal. Now, typically, you do not take a three-river morning star without confirmation, which means that the day after tomorrow, you would need to see a large candle that is green with a higher high and a higher low than the previous candle. However, that was just an illustration of what might occur. What is occurring right now is that trading has opened up in Australia. It is Tuesday there now. Market is trading at 1750.40. You can see that it is slightly above the closing price of the doji that we have drawn in, and we'll see what develops throughout the trading day in Australia, Hong Kong, London, then back into New York. We still want to let the dust settle and see if this is a beginning of some sort of a V-bottom or simply a consolidation, since the market has been under tremendous selling pressure for over a week and a half. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.